Yes, definitely happy to be back and always good to hear Jun Rong. And so thank you, IG, for inviting me to be back. The last sharing was in November last year, and the previous one was in May. I think I just get the ball rolling. So when I was approached by IG to run this webinar, and I said immediately the first thought that I have is China stock. I think a lot of us are very curious or puzzled about, or maybe a bit suspicious, is this rally real this time? So I came up with this topic. I told Benny, how about China stocks? Because this is what we last year kind of discussed about it, but not in detail. But today I just want to devote the whole session just to discuss about the China market in greater depth. And so when I come up with this topic, I say China stock, potential bull and risk. And I also have another topic which is the same, but the wording is different, but it has a lot of different meaning. If you're going to reposition it as a China potential bull or risk, it's a totally different meaning. But today I'm going to take on the potential bull and risk for China stocks, and also the potential bull or risk. Now, what's the difference between the two is this. When I say potential bull and risk, I'm referring that China, there's a potential bull, but what are the risks that's out there that we have to take care of, which I will discuss that. But if I'm going to reposition as China bull or risk, there is a totally different meaning. I think today I just read, come across this headline by Bloomberg. One of the reports says that the China bull is at this moment could be in 2015 or 16. For those that's quite long enough in the market, you know that 15, 16, that was a short brief of bull, then followed by meltdown, and it stayed there for quite a while. So when I say China potential bull or risk, it means that could this bull be not real, and very shortly it'll come back down. So I'm going to discuss that as well. So at the end of it, we're going to have a Q&A, and maybe it's good to hear from you. What is your point of view? So again, once again, what I presented here is based on my observation, and definitely whatever I present, I will consume it myself, but it's for my personal consumption. So definitely you have to consult your licensed broker, who is IG, and they have a team of very good analysts and people who can help you over there. So this is what we're going to discuss tonight. And for those that first time hearing me, 2024 I think was a year of award for me, that I received an award from TradingView as a trading wizard. So I don't even know what is that. So until I went there to study deeper, I realized that it's such an honor to have that award from TradingView. There's only 3 last year, and I'm the only Singaporean to have that, and maybe the second Asian to receive this award. So tonight we're going to see a lot about how I use fundamental analysis. Now, what is fundamental analysis? It means that if we see a fundamental, we also have to confirm with the technical view, which is it gives me the perfect timing. I won't say perfect, but it gives me a good timing of how to enter the market. Or alternatively, if I see a technical expects that market may be going up, I also have to confirm it with the fundamental news. So I'm going to use this skill, and it's not just only exclusively to me that I can use it. I hope that throughout the maybe an hour or 45 minutes of presentation, you're able to wrap off something that you can do it as well. I think the whole idea about when I work with partners like IG or different partners with the exchanges, it's always an honor to be in a space like this. But the bottom line is that I hope that the viewer or the listener at the end of it could wrap up something that is possible, and it's quite fun to do it, to combine fundamental and technical to see how things unfold in the near and maybe in further future. Now, let me just get started, and this is the disclaimer. So again, what I presented here definitely in no means that I'm making a recommendation, but I just share out of my experience and my observation. So please consult your licensed broker, and also my licensed broker as well, IG. Now let's do a recap of what we did last year. And the last session that I had, it was a very nice one. It was before we went for year-end holiday. So that was on the 27th of November. So last year I have 2 sessions with IG, and in May last year it was also quite memorable. We went to this NTUC center. That's where I met Jin Rong. It's always happy to see him. Now let's look at 27 November. What did we discuss about? Our topic then was market outlook for 2025. Where's the gold direction? Where's the US direction? And where is China direction? So in the past, when I speak about China, I try to be a little bit more reserved because I realized that a lot of investors don't have very good light about China. Maybe they got hurt in the stock market before, understandable. So I always mention the word Asia. But last year I thought that it's very timely, last in November, that I think I have to be bold enough to mention about China market. Let's take a look at China. Yeah. So that was what we've discussed. And we stopped here in November, where although if you could see that the market was around the high was around here 22,000, then was 20,600. But we discussed that in 2024, the starting of 2024, I see that the volatility pick up tremendously in the whole year of 2024. So in November, my projection for 2025 is going to be the same. The volatility may be greater, not just because of Donald Trump, but I think also because of inflation as well. Yeah, but Donald Trump add a lot of dimension to the market. I think which if you are a trader, I hope you enjoy it, because as a trader, we love volatility. But tonight, I think I'm going to position myself to be an investor as well, because I think I'm going to invest into this part of the world in Asia, especially in China, in the longer run. So where is the market right now? Since November we left off, we studied that the market is going to maintain volatile. And today we're here. So that was November, it stopped there, and we could see that market peak at 22,000. It formed a double top. And that was, if you have followed some of my social media channel, YouTube, I also mentioned that there's a double top. And here we are today. And today the market is at 19,740. So you could see that from November presentation, the market continued to be very volatile. In fact, now compared to November, it seems bullish back then. Now is quite low. Yeah, but having said that, it's not a bear market yet, because from here to here is just down 11%. So technically, to qualify as a bear market, it got to be around 30%. So that at least is the benchmark, how to qualify that the market has entered into a bear market. So in November last year, also discussed about Asia market, especially for China. So what is this OCBC Security HS Tech? Is mainly those China stock, technology stock listed in Hong Kong, but OCBC, the Lion Assets Department, also tabulate this as an index itself, or ETF, something like that. And so that was our discussion back then, and we studied into could it be a first wave, second wave? And of course, I'm suggesting we're studying into whenever you see this, perhaps the third wave may be coming. So that was in November last year. And so where is Lion OCBC Security HS Tech today? Okay, so not that far, but with this run is about 30% or more. Today is above $1 right now. Yeah, so I think based on the understanding of elite wave 1, 2, and third wave as being impulse, maybe it's not ended yet. Maybe there's more upside to go, just based on the elite wave. So again, it's not recommendation, so it's based on the study of elite wave. So we also study into gold, and that was May last year at the NTUC Center together with IG. And then gold was about 2003, and through this study, the cup and handle, we see very clearly. So again, my position is always, I don't just look at the structure, not just technical, I also understand the fundamental of things. So we can expand the topic during the Q&A later. And in fact, if you want, you can start to submit your question on the chat box. So together with me, Jin Rong will consolidate the questions. Then after I finish my presentation, I think what I intend to do is that we can take on some question. I hope I can answer all the question, or I hope I can know how to answer all the question, but I try to do something where I will bring up the chart as well and to see whether it makes sense to you how I analyze the market. So it was in May last year that we saw they go with cup and handle formation at 2003. And based on this structure, it means that there's more upside to go. So we're seeing that, of course, we didn't discuss whether it reached 3,000 or not. Seems like very far, but I know it's possible. When you see this structure, likely it's going to go. But beyond technical, beyond structure, the fundamental even more is speaking to me that gold is going to continue to move up. Maybe that will be the next run that I have with IG to talk about gold, silver. I'm not sure, we haven't discussed about that yet. If it's timely, I will talk about it in the precious metal market. So where's today? And today it when, as of this morning, when I update my chart, it was at 3,040. Okay, so that was what we've discussed in November and May last year with IG. So now let's turn my attention to China stock right now. So the topic could be potential bull and bear, and it could be the topic potential bull or bear. Could it be a trap? So let's discuss about it. Then we have to really understand the fundamental of this recent rally or the beginning of this rally in the Chinese market. Now, so the rally began before DeepSeek. I think most of us attribute that because of the DeepSeek, it triggered attention that, wow, Chinese market or China market, their AI is finally emerged, because we remember very clearly that in 2023, at the end of 2022, November, that's where ChatGPT being introduced, and the whole year of 2023, 2024 to the first quarter of 2025, the rallies by the G7, by the M7, Magnificent Seven, is mostly driven by AI. So now, since that the China is also taking that throne, not away from US, but they also share this pie, so the attention is all drawn to China. But most of us could remember it's DeepSeek, but it's beyond that. Now, that's my job here to share with you what I understood. Yeah. So on the outlook that we also share, we also cover about on China, which is the last session that we have on 27 November. Now, the China structurally, what I saw was this. And DeepSeek was 20th Jan, so which is around here. Yeah, so DeepSeek. So then in November, I shared that I saw this happening, which is on the 24th of September 2024, which was last year, the China stimulus. Yeah. So if you observe about Chinese market, the China government hardly intervene their stock market. They try not to intervene the stock market, as far as I could recall. Yeah. So I may be wrong, but when they do this for the first time, they intervene the market. I felt that they are quite ready. That's personal feeling, to take on the war. That means they have done their preparation to throw in this money. And during that day on the 24th September, their central banker, the chief, mentioned that if need be, we will do more. Just by the mention of the stimulus that day, the market went up. Now, I want you to look at the percentage from 11,000 to 16,000. That's a lot. Okay, just a few days of rally, that's a lot. So it brought back memories of 2015 and 2016 when I was in Hong Kong preparing for the, not the major guy, of course, I play a very minor role over there to prepare the market for the Shanghai, China, Shanghai, Hong Kong Connects and Shenzhen, Hong Kong Connects. So I participated in it in Hong Kong. Now, so structurally, I'm seeing the same thing, like what we saw in the Lion OCBC security HS tag, right? Structurally, yeah. But later on, we're going to move into the fundamental reason why I felt that the China stock could be at the beginning of a rally based on this structure and fundamental as well. So structurally, I could say that could this be the first wave followed by second wave? And bear in mind, back then, DeepSeek has not come out deep enough yet, so it has not surfaced yet. So now, so that was my take in November. But now with DeepSeek, market was this morning I checked the A50, which is the China blue chip stocks, the 50 of them in Shanghai, both in Shanghai and Shenzhen. Is about 13,700. Did not rally a lot, but some of the individual stock have rallied much. So could it be also means that more good quality stock in China were subsequently rally? So that's a point of discussion tonight. Yeah. So structurally, you see that 1, 2, could it be 3? And then let's look at the fundamental right now. Can it evolve to a sustainable pool? So looking at it, I'm saying that there's potentially there's a third wave to come in the whole of the benchmark of A50. There's a blue chip index for China. And let's look at the fundamental reason. But before that, I thought of just to explore the US market, just to get a sense of balance. Where is Chinese market now? I personally felt that it was so undervalued. Since 2022, I can't remember how many sessions I had with IG, but I believe I did talk about it, that the China market, Asia market is seriously undervalued. But let's look at some numbers, some data, and we try to do a comparison to strike some equilibrium here. Yeah. Now, if I'm going to look at the market since 1990, so what was 1990 for yourself? Maybe you're not even born yet, but in 1990, I was in polytechnics, so I was a young man, not even served the army yet. So now, 1990, the US GDP was 5 trillion. And this year, projected, I believe, it was at 30 trillion US dollars. Just based on this alone, from 1990 to the last 35 years, was it 35 years? Yeah, it is 35 years. The GDP for US have grown by 5 times. But let's look at the performance of the US stock market in general, based on GDP. Yeah. So now, if we're going to compare from exact year to the year high, the highest point was on the 18th of Feb for NASDAQ, is 22,191. Now, the stock market have increased by 109 times. Now, remember, the GDP was increased by 5 times. So if I'm going to talk about compared to the stock market performance to the GDP growth, the stock market have increased by multiple folds, 109 times. But of course, you say that it's, I wouldn't find it's a very fair comparison, because tech stock is the in thing in generation to come. When I talk about generation, it could be 40 years, right? I think the next 40 years, I think the tech stock is still something to talk about that will set a trend, the growth of any stock market in the world. So let's look at their traditional stocks, Dow Jones then. In 1990, it was 2,500, recent high 4th December at 45,000. And even for traditional stocks like the Dow Jones, only 30 of them increased by 17 times, 17 folds. So again, the GDP was 5 folds, Dow Jones 17 folds. You're talking about at least 3 folds much higher than the GDP growth. So that's a point of comparison here that I'm trying to do here, where I'm seeing that the Chinese market is seriously undervalued. There's a lot of growth potential. If we could look at the Dow Jones itself, compared to GDP, at least 3 folds more. NASDAQ is many folds more. Let's look at the Chinese market. And when I look at the Chinese market, let's compare to 1990, where's the GDP? It was 0.4 trillion US dollars in US dollars term. And of 2025 projected, it should be about 19 trillion US dollars. So from the last 35 years, their GDP have increased by 49 times. Now remember that the US GDP has increased by 5 times. But of course, again, not a very fair comparison, because US market in the 1990s is already a developed nation. Yeah, so, but I just want to get a sense of equilibrium down here. Now, so 49 times, and let's look at the Shanghai Composite Index. So Shanghai Composite Index is like everything. It is a Rojak index. Rojak index means that the big cap, small cap, mid cap, everything just packaged together as one. So I say here that it track all A shares, B share listed on Shanghai Exchange, making it one of the most comprehensive indices for China market. So you talk about the whole dynamic of the Chinese market. you look at Shanghai Composite Index. So if you want to look at the Chinese blue chip stocks, maybe you can consider to examine China A50. Now, so going back to the comparison of their GDP. Now, remember Chinese GDP over this period, the last 35 years, increased by 49 times, but their stock market, Shanghai stock market, is only increased by 34 times. Now, not even 1/4 of their GDP. Can you see that comparison here? But if you look at it seriously, you look at the cars, our cars on the road, increasingly, you can see that there's a lot of BYD or Xpeng on the road, or maybe other brand that you're not even familiar, but suddenly it just looks very futuristic in our Singapore road itself. And you look at the devices that we have, out of my family of 6 of us, half of us are using China phone today. Then the other half are using iPhone. So, so you can see that the technology, the things that we have, the high-end things that we have, the things that we drive, the gadget that we have, a lot of things are no longer just button and shirt, which I believe many part of this shirt come from China. But now today it's not these low-end manufacturing stuff. It is handphone. I believe a lot of components of my desktop, my LED screen is from China. So when you look at this, then there's something is off. That could it be more potential growth in the future? Now let's continue to drill in. Now I'm going to compare the China blue chip stocks. Now, why 2025? If I look at the China GDP, now this is China GDP, and why 2005 to 2025? Why the last 20 years? Is because when I do my research, I try to do a comparison between the Chinese GDP and the blue chip index, and I realized that before 2005, they don't have a blue chip index. So the China A50 is only birth off in 2005. That's a point of measurement that it stopped tracking the blue chip index. So it represents that how young and how inexperienced the Chinese market, capital market was. Yeah, I can use the word was because I think they're developing. So now looking at 2005, Chinese GDP was at 2 trillion and today projected 19 trillion. And that will be a rise of 8.5 times. Now, let me just look at the China blue chip stocks A50. As you could see, that it started only in 2005. That was 3,500 points. And today is at 13,700. So about 3.8 times. So I'm going to compare with the GDP 8.5 times to the growth of the A shares, the blue chip company, which I think many of us are quite familiar, like Alibaba, Tencent, Meituan, and Xiaomi. So all these should be inside A50. Okay, I cannot be exact because I'm not the expert in the. I'm not the FTSE person, so I cannot be specific. But to go and do and check it out, I think you know what I mean here. Now the GDP is 8.5 times compared to their growth in their A50 index is only 8.5 times. So I felt that potentially, just based on this logic itself, there's a lot of potential and runway for the Chinese market. That's what I'm seeing here. And so what's the conclusion from these findings? So again, after this presentation, it's not going to take too long. Maybe for the next 20 minutes, I should be done. And then we're going to enter in time of Q&A. And so how you can do that, in fact, right now you can submit your question in the chat box. And together with me, we have Jun Rong, the other side, very well-loved analyst that I always like to hear his view as well. So later on, we're going to have a conversation together. So what I want to do here is that I also want to look at the chart itself. Maybe you can spot some ideas, different stock. Maybe you can focus on particularly in Chinese stocks that it could be listed in Hong Kong, Singapore, or Malaysia. So then that will keep our content for today, our discussion really neat. So what's the conclusion from these findings? And definitely I'd love to hear your thoughts. And I may not be right on my research, yeah, so but just want to share with you what I know. Now, so the Chinese market have come a long way. Now, let me just give you some history, some background here, and let's look at the Chinese market, the rally, and why even the Chinese investor are quite disappointed with the Chinese market all this while. And why I say so? Because I just came back from China in December for holiday, of course. So I went to Great Wall of China for the first time. Yeah, so long, right? For the first time I went to China. So it's more also to bring my kids to experience China, how high tech they are. Yeah. So, but we climbed the Great Wall and we felt happy about it. So I promised them to give them picking duck every day. So we did. We have many picking ducks every day. We're picking ducks. It's only about 30 to 40 Sing dollars for one picking duck. So we enjoy ourselves thoroughly. But they also saw what's happening over there. So we hop onto the taxis. The taxis are just amazing that they have a full panel of LD screen. We hop on, and within 3 minutes, we tati. 3 minutes, this space wagon is here. It's nothing expensive. It's just normal tati, right? The space wagon kind of pick us up, China brand, of course, full screen LED panel. And then when we sat on it, the taxi driver just on the massage chair for the middle passengers. So we are just totally amazed. So the moment we step back, come back to Singapore, and so I also do the Grab, and the experience is so tremendous. Immediately, a small space wagon come and pick us up, a family of 6, but it was small. Noah's, I think the brand called Noah by Toyota, but everything seems not as good as what we just experienced yesterday in China, just that comparison. But they come a long way. And when I was there, I also tried to interview those manager level, because I met up myself, my supplier of other business in arts as well. And so I met up some supplier, and I told them about the potential. Remember, that was December. I said the potential of Chinese stocks in years to come. And they themselves are quite skeptical themselves. So then I asked them, which year did you buy into the Chinese stocks? They say in 2015-16, and this was the year, 2015-16. Yeah. So I think they got hurt, many of them. So many of them also quite skeptical about their own shares. But I would say this, that as an investor, I think for some of you as investor long enough, you know that all of us come a long way. We got hurt before, but as long as you don't give up, you keep on refine your skill, you're just going to get better. Because most of the mass market investor, we will always be very hesitant to buy into shares until it became so hype up. Yeah. So when it became so hype up, they say, oh, I think I missed the market. I better buy now. If not, I'm going to miss it, right? So most of the Chinese investors are not excluded as well. So these Chinese managerial level that I met up with them, they also have very bad experience about Chinese stocks. So even their mass market don't believe in their Chinese stock. So that was my experience. But I personally felt that then it is the opportunity. When nobody are very skeptical about the market because they do not understand how the market works, then I think the prices became so cheap. Yeah, I would like to get my finger wet to buy very responsibly according to my assets that I have. Now let's go back to recap about the Chinese stock here. So 08, we know the story. That was the 08 Lehman Brothers crisis, the subprime crisis, the US crisis. And before the crisis, most of the market went into the major rally. So China was the same as well. But because of the subprime crisis led by Wall Street meltdown and Lehman Brothers collapse, the whole world also take the lead from the US, went into hibernation mode. Yeah, for a long time. But US rebounded very quickly though. But Chinese market, no. Okay. And Singapore market also the same. And many market went into this mode of hibernation. Now, so they were happy about it, but after that ended with disappointment. So in 2025 and 2015 and 2016, and the Chinese trying to open up their stock market to the world. So what they did was that before that, it's difficult to invest in China. But what they did was they tie up with Hong Kong, their Shenzhen exchange and the Shanghai exchange out of Hong Kong. Those foreigners can buy into selected Chinese stocks in Shenzhen and Shanghai exchange through Hong Kong, through your Singapore broker here, IG. Then they go to Hong Kong, you can invest in China stocks. So it was a surprise to them that it was so overwhelming. They never thought that it's so popular. So the world is like getting ready for China. Why? Because in 2011, we already knew about Alibaba. Alibaba was a respectable company back then in 2011. They tie up with PayPal. I can't be exact on the timing, but they became well known after 2011 after they tie up PayPal, Alibaba. And a lot of businesses are doing import-export through Alibaba platform. So we knew about that. So a lot of foreigners jump into the China stock market when this thing happened. Now, again, the percentage gain was tremendous from about 6,000 plus. It go up to about 16,000, 15,000. That's a lot. But then shortly later, it collapsed. Now, this collapse was due to not because of the fundamental reason, but it's a technical reason. The exchange could not handle the unexpected volume. And then it triggered a circuit breaker. And because they're so inexperienced, it triggered another circuit breaker. So when second circuit breaker was being triggered, it just sent a market signal that, oh, something's happening. So the market continued to sell down. So that's was what's happening here. It's not fundamentally, it's not sound, but is more of a technical reason. And by doing that, so what happened then was they terminate this chief, the regulator chief, who's they felt that he's responsible for this. So you could read this that under his watch, China new circuit breaker mechanism designed to limit any market sell-off was deployed twice in January in response to the stock market, and it caused a lot of panic. So it's very technical reason. But from there, you could see that the market went into hibernation mode very briefly again. So then the next rally comes is pre-COVID. So I think that the Chinese market is just quite unfortunate over the last few decades. Yeah, they always wanted to get involved in the, they want to shine in the stock market. That's what I see from the chart, but it's quite unfortunate. So you could see that before COVID, they are ready to run again. I think this time around is quite genuine. They are ready to run. So in 2020, before COVID, we can sense that the Chinese market is of different standard. The car already there. BYD was there, but not on par with Tesla yet. But you know it's there. It's not so beautiful, but you know they are up and coming. I've been using their phone and very lasting. This is the third phone that I'm using, their phone. Very lasting, and I like it. Now, so what happened here is that technically, then I was also quite hopeful that I thought that this time that's it, it's going to run up, but unfortunately, it met up with COVID-19. Then the whole world went into tailspin, and I believe that the Chinese believe that it's going to take a while because they have to fight the COVID is the number one thing that they have. And fighting the COVID is not new to them because in their dynasty, you know how the Chinese, when I visited the Gugong, you know, the Tiananmen, the Gugong, behind the Tiananmen was Gugong, the Forbidden City, we call that. The way they design is, you know how the Chinese palace being designed is really a lot of blockages. So the design was deliberate back then. Was then thousands of years ago. There's also pandemic. So the emperor, what they need to do is to save their only son. So when the pandemic happened, they have to lock out all these doors. It's the inner palace, outer palace, middle palace. They have to lock out just to protect their own bloodline, to keep this dynasty going, their own bloodline. So it's nothing new to them. So when they locked down, I still remember in 2020 when Wuhan announced the lockdown, it was a major news in the world that some of them laugh at China, some of them just don't know what's happening. But shortly later also come to Singapore that we also have a lockdown. So it's nothing new to them, but they know that it's going to take a while. So what they did was they take the opportunity to do some cleanup, which at a point in time, I recognize that what they are trying to do. Now, in the economy, they are quite ready to present to the world. That's what I felt. But since the COVID hit, there's nothing, they have to do something else more productive. So they take this opportunity to clean up their property act, which is their property developer and their retailer. So they also clean up the tech, how they monopolize the market, and they also do some regulatory cleanup, including the childcare, tuition center, whatever. So they took about 2 years to clean up this act. Personally, as an investor, remember I started investing in 2015 and 16 when I came back from China. I like it because I know what's happening on this circuit breaker thing. So I started investing around this period. So when this move came, I was really happy because I would have to assume at a point in time that was a first wave, second wave, and third wave in the making. But because of COVID, it kind of hibernate everything. But when they have this property curb and the tech crackdown, I personally kind of welcome it because there's still something else that Chinese market are still not doing that well, which is uh, their over leverage in the property market and the certain the tech sector. When they start to regulate, I felt that is a good thing because where I think at a point in time, I think even at IG, I did mention that it could be a short-term pain, but structurally they're building something cleaner, so it could be a long-term good. So I felt that at this point in time, that's where we are seeing here. Earlier I mentioned that in September last year, they did the Chinese government did a stimulus. I felt that this time round they are ready because they have been trying all this while, but this time around I think they are quite serious that they are pouring in money. Yeah. Now, so the question is China ready for the world this time? I would think so. Yeah. Now let's discuss further and look at how I rechart the path down here. Now, so initially I thought that the rally will come, first wave, second wave, third wave in the making. So I have to recalibrate and make adjustment with as things changes. Yeah, so that's what every investor should do. You know, sometimes we talk about grand plan, but if it don't come to pass, then we have to make adjustment. But we cannot be hold to ideas that is blind. That if the fundamental change for good, we have to change as well. I will have to cut loss. So now how I restructure it is that instead of drawing that wedge, now my new wedge form is even better, which I felt that the Chinese market is still in this consolidation phase. Now, so you may want to register this chart and then you put it on your end, save it as a screenshot. So as time passed, especially when it broke above this September high and it broke above this high, I think they're quite ready. I would say that if this is one wave, two wave, third wave, and I would say that if you start to break above this high, the third wave should be in the making. Yeah, so what am I doing now? 2015 and 16, I started accumulating some. And before September last year, for some strange reason, I just got this gut feeling that I have to point some more, so which I did. And my broker, thankfully, is not IG, that called me up, say, Mr. Wong, are you sure you want to buy it? I said, yeah, go ahead, please. And shortly later, the China stimulus plan they announced. So I did got hold of some just right before the announcement. So I'm quite thankful about that. Now, let's discuss further. So that was a China A50 blue chip stocks. How about the China Composite Index? So it's the same thing as well. So I could see that it's not just a blue chip stock that's happening, but also the China General Stock Index is happening right now. So I'm just waiting for this break. What I'm doing here is that I've not go into full swing yet. I'm accumulating, and personally I'm accumulating, but if it start to move up, I will hold it. If it break on top, I may consider to add on more that those that lagged. Lagged means that now when the index move up doesn't mean that all the stock will move up. Some of the well-known brand may move up, but there are still some of the or many of the less well-known brand that's in the cold storage. I will start to pick up a lot from there, but I need the index to show me that they are coming. Okay. Now, so are there any fundamental reason to support this breakout? So we studied about the technical reason. Let me just discuss about the fundamental reason. Okay. So China, there's three issues that we have to understand to discuss. For me to park my money there, some of the good stocks, not just blue chip, good potential stocks, I think I'd like to buy them or invest in them. But in the macro, I have to understand about the debt issue, the inflation issue, and also their business prospect as well. When I say business prospects, I'm referring to their trade. Now, for the debt issue, we know that the China is a very big country. I think the Malaysian will appreciate better because Malaysia is also a big country. They have states, and then they have central government who is KL. I think they're able to appreciate better about how China function than we Singaporean, because we Singapore are just one city-state, and the government have the money, and that's it. But Chinese government or China is a very different story. Their local government, which their provinces, are in debt. Yeah, so which is bad. But I think they also expected that because their infrastructure have come to a point of standstill. They cannot raise enough uh, fund for investor to buy into the bonds because there's no really stories to sell much growth in their infrastructure. In the past was they raised bonds to fund their roads, their high-speed rail. They're still doing that, but the growth of that is no longer there. So it's very difficult to gather money from their own local investor, including institutional retailer, to buy their own bonds. So their debt are all internal. So these local government now they're in debt, but I'm not too concerned about the local government debts or the province's debt. More importantly, the central government have money. I have to perceive that they have a lot of money. That one is more important because they announced, which is not new news, in November that they are going to fund, and to me, it's a debt swap that they're going to guarantee about just one of the tranche, about 1.4 trillion. This will be US dollars to help these local government. So I would say that in this aspects, I don't have expertise to go in depth about this. I would say that the debt, I'm not worried at all. Yeah, I'm not worried because as long as the central government have the money, they have the fund, I have no issue about their local government debt. Yeah, because the big brothers, the central government will come to redeem, which is happening. Yeah. So let's look at that inflation. In fact, the world is having inflation, and US may go into inflation mode again in time to come because of all these tariffs that's happening. Now, so China don't have inflation, China have deflation. But because Chinese or China also understand about they are not living an isolation world. If the rest of the world having inflation, it will somehow still affect them. So though they're having deflation, their consumer are not spending as much as they like to be, but it is picking up right now. But they're having deflation. But if the globe outside of China having inflation, it will still affect them. But what I could see here is that inflation is not a problem to them at this point in time because they're having deflation, but they're also preparing for global inflation to come. So what we're seeing here in 2022, 2023, 2024, China is one of the leading purchaser central bank among all the other central banks. Now, this chart represents the central bank alone when they have started to buy gold. Yeah, they accumulate gold. When central bank accumulate gold or individual accumulate gold, why are we buying gold? On one note, which is we hedge against inflation, right? We therefore buy gold because gold do not pay dividends, so it's not a very good investment assets. But of course, been buying some gold since Lehman crisis back then when it come down. I also started by around 2013 and onwards. Back then, also looking for capital gain as well. Should not be too much. It should be a fraction of what you're supposed to invest because of inflation, which I'm seeing that because of an ongoing of QE and money printing, which I believe that in time to come, since about 2013, I understand that, and I know that gold will maintain and will continue to move up. So I think at gold at this price is not the end yet at 3,000 US dollars, but I think that will be a discussion for another time. Now, so why is China buying gold so much? If you look at the rest of the years in 2021 and before, among the central bank around the world is unlike 2022, 2023, and 2024. The central banks around the world have accumulated much more gold compared to the past. So you're also speaking to me that 2022, the landscape have changed, yeah, because of inflation. Now, in terms of business, let's say the debt inflation, they seems to know that they know what they're doing. They're preparing for that. How about business? I think if you talk about from the beginning, I did mention about the growth in the stock market. Of course, I'm referring to that. It's always our center of focus is always about technology, right? So now let's talk about the growth, and did China succeed in their transition from a low-end manufacturing on infrastructure-based economy to a high-tech economy. I think it's very evident from what we see that the EV, who are the high-tech, I think now there's three parts here. EV, the high tech, AI, and then the other one is called quantum computing as well. So they are leading in the EV about 2 years ago. So BYD overtook Tesla, and I believe that they're still leading. So in DeepSeek in AI, I think they have emerged, not exactly overtake AI yet, but it's definitely something, is a hit turner to take a look. Even NVIDIA call DeepSeek R1 model as an excellent AI advancement. So they're moving great. So I would say that in terms of that, I will put a tick on that. Inflation, they are preparing for global inflation to come. I put a tick for that. And AI and EV, when it comes to business and trade, I think they are preparing. They're doing well in terms of the technology market. They're transited well as well. And having said that, the oil economy is still there. They are still the manufacturing of the world. But on top of it, they're also taking on the EV and AI as well. So I think there's a lot of potential. That's what I'm seeing in China. And so that's the fundamental about China. So we discussed about the technical. I just give you the fundamental framework. And of course, I look forward for during the Q&A, we can explore further and deeper. Maybe we can go some practical as well. We can examine the individual stocks. Maybe the focus where is that I believe that there's a lot of first wave, second wave, and potentially moving to the third wave. We can examine that. I just want to keep it very focused. If any stocks that we would like to explore, I would like to focus on that, yeah, much more. Now, so what are the risks consider? So earlier I did mention about the title is that potential bull and risk. So I think we I hope, I'm not trying to convince you, but I hope that you're seeing what I'm seeing here, that potential bull is there, and I believe that is a beginning. But in all markets, including the US market and Singapore market as well, there's always risk. Yeah. So if I subscribe to the idea that the China market is at the beginning of a bull, then what are the risks to consider? Now, so same thing, the fundamental investment have not changed. So what I have just presented to you is give you a benchmark of their stock market. So whether is it a general stocks in the Shanghai Composite Index or their blue chip stock, we're seeing certain trending. Yeah, so it's at the breaking point. So once it starts to break, of course, if we are not getting it now, it's fine. But once it starts to break above, we may have to pay a bit more premium, which is fine as well. But now I'm in a position of buying some. So once it break, I may want to buy some more. Yeah, so I'm collecting a base here, just describing about some strategy here where again I'm not trying to ask you to buy. Yeah, now so again when we go through the stocks, individual stocks, I believe that even when the third wave starts to happen, there's still a lot of laggards around. So we have to look at it individually, and of course when you click on it you can speak to your broker, but try to understand the business they are doing, try to understand the financial numbers, that in the ratio, are they still in a lot of debt and are not making money at all. So all this fundamental is still important. So the risk is that if the third wave is on the move, yeah, so do not get too sucked into just buy any other stocks or what you hear from your friend, but take a good serious moments or period to study into the individual stocks, the business, their financial numbers. Are they good? If they're good, but why are they not performing? You got to ask yourself, why are they not performing? Is it because they did not do marketing enough? If that's true, then I'd love to buy them. Yeah. So the risk is that we still have to go through what most of the micro analysis analysts like to do, go through the numbers, business, what they're doing, is there growth potential or not? Yeah, because there are thousands of stocks over there, so we still have to do this part on our end. Now let's look at on 29th May 2024. Yeah, so in fact, in 2022, I started observing about China stocks, US stocks, especially the gold market in 2022. That's where inflation started to pick up. I think there's a lot of shifting. What I'm seeing here is that in 2022, before inflation picked up to 9% for US, then NASDAQ was down. But what I could see here is that the Asia stock market was up. Yeah, a lot of us missed that, was that the US market was down about 30% or 30+%, but STI was down as well, but it was only down 14%. Yeah, but before it hit 9, we could see a general trend that the Nasdaq was down, but STI, Singapore stocks, Asia stocks was up. In my memory, it was quite unheard of because Singapore market was always a follower. Now, I want to talk about Singapore market in this topic here because Singapore market is important because you have to understand that a lot of our companies, a lot of revenue, listed company, a lot of them, their revenue derived from China. Now, if China can do well, many of our listed companies here in Singapore should be doing well as well. So that's something outside for you to think about it. Now, on 29th May 2024, in the physical event in NTUC, I presented this topic. So then I don't see that the index are doing well yet. Yeah, I'm preparing for it, but I do believe that there's some forerunner. Some of the individual stock may start to move up. And during the practical session, I remember we cover a few individual counters, bonds as well, US bonds and US indices, because then the topic was about the commodity US market and China, right? So China, we have come then the conclusion that Xiaomi back then on April 2024, 15th of April, it was on the first wave, second wave, and that night it was somewhere around $16. So when I look at Xiaomi from a household product, handphone product, then they are moving into EV. Whereas I was doing comparison that the Apple, they also try, because Apple is also it is a handphone maker company, right? So they attempt to do the EV, but they can't give up. But what I saw Xiaomi is that they push through, and physically they've delivered I can't remember the model, but the very sporty looking car until December last year when they take a look. I sat inside as well. Then and the order already coming in. So that was last year in May. There are order coming in already. So I see that it's not just an R&D stage, but it's physically it is ready and it's pushing out. So that was the a bit of risk that I'm taking back then. I'm hoping that because structurally it's showing me that there was a first wave, second wave, and seems like it's moving on the third wave. Yeah. And when I look at the company product line, they've expanded to EV, that's something that I like. I like to take a bit of risk, but measured and calculated risk, because the downside risk is quite small. Yeah. So, and is Xiaomi today? At the point of preparing for this slide, because I need to send all the slides for IG compliance for approval. The high was at 58.70, but today as I update my slides, the high for Xiaomi is at 59.45. Yeah, so again, if you ask me, will I get into Xiaomi today? I think the PE ratio is a bit high. I will not, but have I taken profit partial? So I'm still holding some of it. I hope that it will continue to move up. So just to give you some investment strategy is that then when will you take profit? You may ask. Honestly, I do not know. Yeah, that's something I do not know. But since I've already taken partial profit, my profit general as a whole, I already lock it in. So even if it come down to my purchase price at $16, I'm still making money. So I've made the money. So it's not too much of my concern. So I just also demonstrating to you that this is how we should manage our position as well. Of course, if you have your own mandate or your own techniques, please go ahead. But once if it give me a good search, I would definitely take out some profit, no matter how potential the future for this unit with Xiaomi is going to be. I'm just going to take some partial profit. But I think the China wave, it seems to me it is maybe it's just the beginning. I do not think that it is a trap. Why? Because it's not just technical, but I think we described about the fundamental. The fundamental, so earlier I described about their history in their stock market. They have come a long way. Yeah. And also the development, the recent year of development in their debt, their inflation, and their business and trade. So we discussed about these three issue as well. I think they're doing not too bad, I would say. Now let's look at some investment and trading strategy before we open up to a dialogue session together with Jun Rong and the rest of you. Now, so the China A50, their A shares today at 13,700. So that's what I'm seeing here for China A50. So earlier we discussed about this wedge. The whole thing, I kind of redraw this trend line. The whole market is trapped into this wedge at this moment. So this was the China stimulus in September last year. So as usual, when this retracement come, I like it. Yeah. So I bought some more around here just right before the Chinese announcement. If you're going to show the date, be shocked that am I the insiders trading of the Chinese government? That says no. Okay. So yeah, it's just some gut feel that I found it's time. Usually when the market get very skeptical, when I look at the online media, everybody's slamming some fund managers that invested in China. I feel very sorry for them. That's why I prefer to invest my own little money. I don't want to get involved in managing people's money because I have to be responsible for them. But I'm responsible for my own action. So I feel very sorry for them at the point in time, and I felt that at the point in time in August, September, a lot of media are talking so badly about Chinese is so risky, the China market is so risky. So it just derived a gut feeling that I think it's time. Yeah, technically as well, fundamental. That's what my understanding is. Then within a few short days, that the Chinese government announced the stimulus package, and they say they will do more if necessary. So this is wave number 2. I hope that it is the case. I may be wrong. Okay, it may sink down again, but I'm really committed. But if I'm wrong, things start to change or cut loss anyway. So this is what I'm hoping for. Once it break above 16,000, I think it could be just the beginning. And today is just 13,700 points in China A50 index. So this China Composite Index, which I'm also seeing that there's consolidation. Is it confirmed the third wave is already here? Not yet, unfortunately, but some individual stocks are already showing me a lot of sign, but the whole benchmark not yet. So I'm watching it very closely. But I'm definitely seeing the first wave, second wave, and I hope that the third wave will come. So once the third wave come, it will break this upper channel on this wedge, and I hope that it will move up. So as it move up, I think that will also benefit a lot of Singapore listed company or the non-listed one as well. Okay, so before I take on the Q&A, I thought of you can connect with me through my YouTube channel. My name Kon Hao, separate. Yeah, you can find me. You should find me. So every week I'll post an insight about the market. I've not decided what to post. I think I'll post about consumer sentiment this time around in Sunday. Do check it out. I think it'll be very helpful. Consumer sentiment of the US market. So then if you like my this 1, 2, 3, the Cha-Cha wave or elite wave, you can visit the website. There's some resources there. I think individual investor and traders will love it. Then every week we'll do a lot of case study on different market. So the case study done in Xiaomi, in fact, was I think starting in 2022, we really eyeballed that. Then things start to happen. Now, so that's my email address. Anything that you find that what I've described, you need a little bit more clarification, I feel free and welcome that you just send me an email, konhao@weipeidia.com. So at this time, I just want to pass back to Jun Rong. But if there's no question, maybe Jun Rong can help me to kickstart the first question. So again, I will not know everything to answer all the questions, but I'll try my best. You can ask me about individual stocks based on the 1, 2, 3 technique. We can examine on it, or you can ask me about what we described tonight. If you need certain clarification. Yeah. So I pass this time to Jun Rong.
Yep, thank you so much, Guan Hao. There are actually a lot of questions. I'll see whether I can combine some of the questions so that all of you will be able to have your queries being answered. So probably I'll start off with the first one. I think he asked for any comments on commodities outlook. So I know Guan Hao has touched on gold, sort of a bullish view in that sense, but probably he's asking more for a general commodities outlook. So Guan Hao, do you have any views on that?
Definitely. So I think Jun Rong always like this statement. I didn't know that's so impactful, but I like it as well. So I mentioned this statement as gold is the leader of all commodities. Yeah, so let me just repeat here is that gold is the leader of all commodities. So as long as gold maintain at a high point, and I do believe that the rest of the commodities will subsequently move up. Yeah, so let me just showcase. I know it's very complicated, but you just remove, just look at this yellow line itself. So maybe what I should do is that, let me just bring it to something that's more neater. Yeah, because if it's too complex, then you'll cause confusion. Let me see if I can get hold of this. Yeah, okay. I think this is much neater. I'm not too sure you can see this, the chart. Gold is already here. So I also believe that gold is an inflation hedge, but the rest of the commodity is also an inflation hedge, by the way. Yeah, so as long as gold move up, it means that investors, central banks are still seeing that inflation is still in their books, that there's a risk of inflation make a U-turn. That's why in 2022, 2023, 2024, they've invested in gold, and the central bank are very right. So by the way, where's 2022 is here. So they invested at the right time. They also supported the market, I would say. So you could see that the gold has been going up. So in a way, they are also hedge, helping the countrymen to hedge in inflation for those countries that purchase gold. But the statement I made is that gold is a leader of all inflation. Now, as long as gold maintained at a high point, the rest of the commodities were based on their time and season. They should move up ultimately. Yeah. So as we could see that the cattle, which is our ribeye steaks, if you like to eat, have ribeye steaks, I think maybe if you visit your favorite butcher, you have to pay much more compared to pre-COVID days. Yeah. So and the rest you'll find opportunity. So what I've drawn here is there's this little triangle. If it break, maybe could will move up. So just technical, but I've been following the fundamental development as well. So corn is very interesting here, that you could see that it start to pick up. Could be the first wave, second wave, followed by third wave. I suspect because gold will move up. So earlier I did say that the rest of the commodities were based on their time and season may pick up again. So we could see that gold is up, cattle is up, copper seems like it's moving up. So last year, somewhere third quarter, I did present a video on copper, on silver. I say gold first, followed by silver, then copper may also move as well. But when it move, silver especially will be fast and furious. Yeah. So of course I wouldn't have time to explain about that, because I say that I want to keep my focus more on the China stocks. So why commodity, ask me? I think it's still related to the Chinese market, because the Chinese have bought a lot of gold as well. So they know what's ahead. I think they are also seeing, like what I'm seeing here, that inflation is not exactly settled yet. There's always a risk that inflation may turn up again, especially now with all this tariff around. So as gold move up, I think since the Chinese have bought quite a bit of gold, they're quite hedged. I think which is also good for the stock market as well. So okay, back to you, Jinro.
Yeah, so very good takeaway. I think the key takeaway is gold is the leader for all commodities, which has been emphasized by Kwan Hao, all over the past few years that we have engaged him. I think the second question is what is the best way to invest in Chinese tech? I think generally, personally, for me, long-term portfolio, generally I do it with a DCA approach, dollar cost averaging, meaning every month you can put in some funds. But of course, IG is a CFD provider. So how do you can actually tap on it is probably through more short-term kind of a swing, potentially buy on weakness, look for area of support, confluence. So that is my personal strategy. For Kwan Hao, what do you think is the best way that you yourself are adapting to invest in Chinese tech?
Okay, let me just draw call some chart here. I'll try to recall what is the symbol. I hope you can see the chart. Then that'll be helpful in my presentation. So let's go back to this. Oops, no, that's not the one. Give me a moment. HST. Okay. Okay, doesn't matter about this. Let me see. HS tag. Was it HS tag? Trying to get a code for the OCBC HS tag. Give me a moment. Is it lion? Okay, anyway, it doesn't matter. So what I'm trying to mention here is that the now how to get involved in the, okay, the question is that the strategy or how, what's the question again?
What's the best way to gain exposure to Chinese tech stocks?
Okay, a very good question here is that one of the best way to gain exposure is I like ETF, where I think the cost is very minimal. And of course, that I also have, you know, I'm reaching 55 soon, so I'm using my all this the CPF money to buy into China shares. But how do I buy in China shares? Unfortunately, I cannot buy individual stocks on the China shares. I hope I could, but I can't. So what I do is that I buy into some China fund because manage my fund manager. But by doing that, you have to pay some fund manager fee, which is pretty pricey. But of course, my view, when you want to pay your fund managers to manage your fund, which I buy into all this fund using my CPF money, um, because of all this monthly, yearly fee involved, so it means that you have to be quite certain that in some years to come, it's going to increase by a fraction, you know, 20%, 30%. Of course, in some years to come, I hope increase by 1/4. Then your fund management fee of 1% or less, that will make sense. It doesn't matter. So 10 years, maybe you pay 10% to the fund managers. But if 10 years later can increase by a 4.5, or maybe I hope that it's more, then I think this fund is fine. Yeah, so that's fun. You can, if you want to invest in China stocks, but you do not know how to do the stock pick, I think then I'll let the fund manager do that. But if you don't like the idea of paying the fund management fee, ETF is one good way. Then of course you can pick into some individual stocks. So like what we did in Singapore in November last year. Yeah, that was in with IG, right? So the same thing, we saw this whole structure just by study structure alone. But of course, back then we don't have the time to describe about the fundamental of China development, not like tonight. So back then the structure was this. If you can see that I saw the potential of 1-2 wave. Yeah, potential third. So usually third, there's more. But again, I'm not suggesting you should buy now. Okay. So I usually like to take the risk. I want to buy. I want to see this move come to break away from this range. The longer the range, the better it is structurally. So once you break, but again, in fundamental analysis, they also understand about fundamental. But exactly this Lion OCBC Security HS Tech, it represents that those technology company listed in Hong Kong and Lion OCBC package them as a ETF light lightness to sell it to investors. So they make it easy for all of us. If I want to buy in a specific team, just China's tech stocks. So this could be one consideration. There's a lot of this kind, not just in Singapore but everywhere. So IG carry most of it. So with GDP Chat GPT, it actually helped me a lot in my analysis. Say, for example, now what I do is that if I liked about, because the Chinese government just announced that they're going to help Chinese consumption, so a lot of consumer staple stocks in China go up, right? So what I could do is that, but I'm not familiar with the Chinese consumer stocks, individual stocks. So what I could do is to ask Google or ask ChatGPT that what are the Chinese consumer staple stocks or consumer stocks that are listed, Chinese stock listed in Hong Kong, Singapore, or China itself. If you want access to their A shares, some of the shares is available for us to make a purchase. You can just ask ChatGPT. They may not give you an accurate answer, so please do your due diligence. So that's how I do it, to help me to narrow down into a specific theme. If you have the time to do that, if you have no time to do that, then you just invest in the ETF. There's a lot of ETF even in SGX itself. You can take a look at the ETF. Yeah. So I pass back the time to you, Chin Rong.
Right. Okay, so thank you for that. I'm going to combine some questions here. I think a lot of attendees have been asking. For example, this attendee mentioned that Hang Seng has increased by 22% year to date, but CSI 300 has only grown 2% year to date. While another attendee mentioned that China A share still underperform China H share. So I think the general question is whether there will be room for catch up in the other laggard stocks in that sense.
Yeah, I think very good question. Let's examine, because I have no direct answer to your question, and therefore that's why I find that to do a live analysis is so important right here, right? So I just put up, I have this page what I call the China index. So basically, I think I just consolidate all the China index, including I need to monitor what is the China yuan doing here. So you could see that I think you mentioned about China CSI 300 didn't perform. No, not quite. You see that since September last year, in fact, the CSI have moved up. It could be a form of first wave, second wave, third wave. And so is the China A50 that tonight we spend quite a bit of time to do that, right? So what we're seeing here is the quarterly chart, and this is what I'm seeing here. Yeah, so maybe a move up. I do not know. Yeah. So Shanghai Composite Index, we all see there's a first wave that's formed. So if you ask me that the CSI 300, was it CSI 300 didn't perform? No, I would say that it did perform as well. Yeah. So you could see that since September last year, it moved up. So is the Shenzhen Component Index. All of them move up in September. And who is this guy? The HSCEI, which is China stock listed in Hong Kong. I think they move up the most. But it went through a period of Great Depression, more than the China A50. Yeah. So those China stock listed in Hong Kong went through Great Depression. Yeah, like this way. Whereas the rest are quite well supported. So I would say that most of them, except for those Nasdaq Golden Dragon China Index, I think it means that those China stock listed in US didn't do that well. Yeah, that one understandable. So yeah, so but it did do a little surge here. So I do not know, but if you can see the overall the Chinese market, either on the big picture, there's a wedge, there's an uptrend parallel channel, but I would say that I encourage you to look back at the fundamental. I think just now the comparison between GDP and the growth of each index, I personally find that's a very good comparison. That when I invest in them, I feel that there's a security blanket that the investing, the good ones, of course, at a low base. It's always nice to invest in a low base, because when we invest in a low base, say for example like Xiaomi, yeah, because it was an actual case study that we take on in November last year and May as well. So low base $16 to go up to $30, that's a 100% return. So it's quite fast. But if I'm going to buy, not suggesting that you do that, the Nvidia at this point in time, but to move by 1/4, I think it's going to be quite tough. Yeah, not saying that it will not, but you know what I mean. So it's always important that when we invest in a low base with great potential, so when it happens, it comes quite fast. So I really enjoy that, to get one bagger, two bagger, yeah. But not all the time have that. Most of the time don't have that, but with a 10 or 20% gain, I'm quite happy as well. Okay, so I kind of know disagree with that. It did not perform. I think all of them performed, as you could see here. Yeah.
Yeah, so I think a very good point, because I think the attendee was looking at the year-to-date kind of time frame. But if
Yeah.
you zoom it out,
Yes,
you know,
correct,
the
correct.
broader chart actually speaks for itself. Things have been
Yeah.
picking up since
Mm.
September in that sense. Okay,
Yeah.
so moving on, I
Yeah.
think more on the fundamental side of things, I think some attendees are finding some reservation around Chinese economic numbers. So, you know, some mention, will the current trend be very data dependent on upcoming economic figures, or will the trend depend very much on government policy, given that current stock market may be artificially managed by the national team? So how will that weaker, softer fundamentals come into play given the current stock market performance?
Yeah, so I think there's many aspects you look into this, whether the numbers are real or fake. Um, in 2020, where earlier we explore that the Chinese government has clamped down on property, uh, the property developer, they clamped down on the tech sector, they clamped down on a lot of regulatory initiative as well. So you could see that they're having a very serious effort that they want to clean up all these uh, uh, behavior. Yeah. So I would say that in the act of doing that alone, of course, the Chinese, they themselves in 2020, they complained a lot because it affected them. You know, they call themselves the Lao Baixing, the general public. The houses property dropped because it were. If I'm going to tell you my HDB or your condo or your landed is going to drop by 20-30%, if it's value at 2 million today or 1 million or 1 million, in 2 years time, 3 years time, it's going to depreciate by 30%. And that's what happened to them, that your $1 million property now today is 700,000. Of course, you'll complain that the government are not doing their job. But I would say that on the third party's perspective outside China, when I look at that, I know personally they're doing the right thing because their property are over speculated and the retailer have sucked into it. So on this action alone in 2020, when they do that, I kind of appreciate what they're trying to do because I think their market, their businesses are doing well, capturing a lot of market. But there's something else missing, which is the system itself. There's still a lot of a black spot out there, so they're trying their best to clean up. So that effort alone, I think their data, I do not think that the data will be make up is fake. So from what I'm seeing, that they're trying their best to be as clean as they can be. Yeah. So at least what I'm seeing here is that whatever they say, they are doing it now. Yeah, they're doing it. When they said in September that when they have they wrote the stimulus bliss, they say they'll do more when necessary. I think I would tend to trust that statement. So I believe that they're quite serious in getting their act together. In terms of business, I think I say there's many aspects, right? So that's why in uh, December last year, I told my children that I want to go China to expose them. I also want to see it for myself because I want to look at the Huawei car. So I was there in the showroom. It's real, you know, it's not fake. So I want to study the consumer, how they do it. So next week I'll be back to Wuhan, you know, but that one's for a holiday trip. So because my wife want to see the cherry blossom, they say want to experience a China cherry blossom. So we're going to Wuhan to look at the Chinese cherry blossom as well. So in the same time, I'll do some case study over there. And so the consumer over there, when I was there, yeah, it's not as uh, bustling as it was before the COVID, but it's not bad. There's well support in the market. So I would say that it seems genuine to me. I don't think that the market is the data are fake. So you just have to develop a good sense of it, uh, experience their product, experience their service. So I'm experiencing their service with them almost daily through WeChat, and they are very productive individual, which I love to deal with them. Whatever I ask them to do, even outside their scope, they're happily serving me, even without getting a tip from me. So I like their service. Based on this low point, I find that is, but again, the risk is that not all stocks are good. So as an investor, we have to exercise our due diligence to go through to understand the companies that you're buying and do study the financial ratio. Yeah, so I cannot always be suspicious that is this number is going to be a fake number. So sometimes it happens, sometimes it don't. But if I always be very suspicious that this number will be fake, then I'm just living in a fear that then you will hamper me down and I can do nothing. So I need to take some risk, because if I don't take risk, I'm risking everything. Yeah, so that's what I have to say. Yeah.
Yeah, so I think just to add on to that, my personal view is probably whether what market are pricing at the moment seems to be that the worst could be over. So I mean, there are still some areas which are soft. I mean, home prices, unemployment rate, so on and so forth. But I think there are some comforting areas in terms of some areas, such as in terms of earnings revision. So after that DeepSeek, we actually see that the earnings forecast for many of the tech companies kind of has improved. So it has been on a declining trend, but now we are seeing it picked up, and a lot of investment bank actually revising their earnings expectations. So to me, that seems to be a good sign, because earnings tends to drive those stock market performance over the medium term. So that is something I like, and of course all the government pledges to stick to that 5%. I will trust them to it, given what we have seen in 2024. So no doubt there are still some risks, geopolitical, so on and so forth. But I think things are in a much better shape than last year. So I think there's still some optimism in that sense. Okay, so the next question
So
is talking
Chiro,
about
I'm
the
really looking forward if you can have a session with the rest of us. I'll be definitely attending about numbers of Chinese market, so you draw all the government numbers, the consumer sentiment, all this and that. I think that will give us definitely I'll be look forward to attend your session.
Yeah, thank you so much. Yeah, I think that would be great if I can show it in terms of numbers. Yeah, so I think the next question is on rotation. So I think all the headlines have been that, there are some form of a capital rotation out from the US into areas of value, such as Eurozone, such as China. So I think this question is more on the US, whether the US Magnificent Seven stocks have actually seen its peak, or should we still consider to buy the current dip? So Kwan Hao, what do you think?
Okay, let me just share with you what I have shared the past few weeks. This one. Okay, so technically, what we're seeing here is the US stocks. Yeah, and the trough that we saw just on technical alone, but later on we're going to discuss about the fundamental of US, which I think so. Just on technical alone, we could see that if I'm going to combine this trough, we always start with a trough. Let me just zoom in a little bit here. The US market, right? So you can see how beautiful that the trough has connected to each significant trough. And by the way, we're looking at the monthly chart, so it's very long term. Now, but if I'm going to combine to place this line to the top of here is a parallel channel. This was in year 2000. I think those who have started investing there, I think the memory still should be very fresh on your mind. Is that significant peak? I place it here. So back in July, I'm seeing that potentially where I'm seeing here, that was July. Then in December, this is monthly chart, I saw this. Yeah. So I saw a very good reaction. Of course, some of you in technical, you understand that this is a inverse or doji or inverted hammer. So when I saw this, I posted a video that just be careful, because we may be seeing peak for the time being. I'm waiting for it to develop. So as it develops, I'm seeing that something is happening here. So I'm suspecting that the correction may come. Yeah, so it could be something like this. Yeah, but definitely if just looking at the numbers itself or the data point, the technical itself, there's a strong reaction on this parallel channel. And technically, I think the correction, there's a likely hope for correction. That's what I'm seeing here. So fundamentally, I think the market has been a bit tired here because it's overdriven by the ChatGPT that was in November 2022. You could see that the exuberant growth. So the growth is still there, but a short-term retracement is very likely. So if you talk about the, there's a flight to quality from US to Asia market, the quality Asia market, I would certainly think so. In fact, I did a study earlier, I did mention, but I don't have the chart with me here, is that I could see that in 2022, that was during this drop. Yeah, during this drop was about 37%. Yeah, this drop, let me just highlight to you here. This drop was 37%, but during the same period, STI, the drop was 17%, 17. So, I mean, those who invested Singapore market before, we know that Singapore market is a small market. We are always a follower of the big market. So when US move up, we did move up, but not a lot. But when US come down, we kind of come down in the same magnitude, if not more. It's always unfair. We don't understand. So in my memory, this was the first time where US dropped from peak to trough when it dropped 37%, but during this period, I saw the STI is only down 17%. And looking at the strength of the US dollar sink, it seems like there's a flight to quality from the west to the east. The quality is, so Singapore is one of them, and China is happening. See whether it can sustain through, but based on the fundamental that we discussed, I think there's a good chance that it may sustain through this beginning bull that I'm seeing. Yeah, so I hope that answers your question about the structurally we're seeing that, and let's watch it very closely.
Okay, so definitely something to keep a watch on, that breakdown of that channel, kind of cautious take in the near term. Okay, so due to the interest of time, I think we will stop the webinar here. But before your leave, probably do allow me to flesh out some slides, mainly surveys. So do give me a moment. Okay, so before your leave, do spare me, 5 more minutes. I'll just go through the promotion again. So this is the promotion that IG currently have. Create an account, deposit at least 1,000. Thereafter, you can start trading, and you can actually stand a chance to win as much as more than $2,000 in terms of a cash reward if you trade up to a certain amount. So if you want to find out more, do check out the QR code at the bottom left of the slides. And more importantly, I would just need you to scan this QR code to offer your feedback on what do you want to hear about at the upcoming few webinars. We'll be interested to know, and we'll definitely try our best to cater to some of your requests. So do spare me 2-3 minutes, scan the QR code, and give us your feedback.
Yeah, so I support Jin Rong. Do give us a feedback. I think your feedback is important so that I can continue to come into this platform. It's always an enjoyable time together with IG and of course with Jin Rong. Yeah, so I really hope that I have an opportunity to attend your webinar where you can roll a topic about China, big numbers. Yeah, the what numbers to look at. I think a lot of audience like myself and most of us will love to attend your webinar or seminar.
Thank you so much for the kind words. And of course, thank you very much to Kwan Hao for taking the time to present his views. His view is always very interesting. And I still remember during that May webinar last year, he brought out Xiaomi. I actually took out some positions. I have taken some profits off them, but his call has been very accurate. And I really appreciate his very unique way of analyzing the market. So we'll definitely, have you back for the next session. And if I can, I'll definitely share some of, maybe I'll have one webinar just to share on China's data and my own personal views on the outlook. So with that, thank you very much. And I hope all of you will have a great rest of the evening. So I'll just leave this slide here for 1-2 minutes. But once you are done, do feel free to leave the webinar in that sense. Okay, so I'll be ending the webinar now. Thank you all for joining and have a great rest of the evening.